Mr. Investor, welcome back to the channel, baby. So I received an email today from one of the commission-free brokerages that I use, showing me they're loaning out my shares, my bionano genomics shares. They're loaning them out. I also want to discuss the selling of our data from platforms to the hedgies. There are also platforms that collect this alternative data, and there's even guides on how they can sell their data to Wall Street. So people create platforms or they create algorithms that will crawl the web, collect social data, and sell it to the hedgies. On the other side of that, I want to talk about bionano genomics institutional ownership and how we've gone from 2 to 3 to 5%, now to 31% institutional shares. But before we begin this video, I just want to say this is not financial advice. This is for entertainment only, and I'm not an expert on the subject or the matter, so please let me know your thoughts and feelings. Drop me some comments, whether I'm right, whether I'm wrong, whether I'm missing some stuff. Let me know how you feel about this topic. So nothing new, bionano genomics is dropping yet again. We're down 4.5% today. But what I want to show you today is actually my commission-free brokerage loaning out my shares. So they send me an email, a monthly statement, showing me what my positions are. And then there's a new sector, there's a new category in it that shows you where it says lending out shares, the percentage of shares lent out on the platform. So here below my head, you can see 74% of bionano genomics shares on the platform are being loaned out. So what does it mean when they loan out shares? So loaning out shares, can I lend out my shares? It's called securities lending. In this program, your broker pays you a fee to borrow your stocks to lend them to someone else. I didn't receive no fee. Typically, that person is a short seller who wants to borrow your stock and sell it ahead of an expected decline. The borrower then hopes to buy it back at a cheaper price and return it to you. Most often, traders borrow stocks in order to sell them short, buying additional shares at a lower price and returning the borrowed stock. If there was a way I could opt out of this, I would opt out. So I just wanted to show you guys that 74% on that platform, Trading 212, that I use here in the UK, 74% of bionano genomics shares in the last month were loaned out. It's almost as if they knew that the stock price was going to drop. I think there's a reason why some of these hedge funds hire psychologists. I think the hedge funds also try to collect data on where people's stop loss is at, so they can trigger stop loss and trigger the selling of shares, so they can drive this price down. I also believe that some of the hedgies invest in collecting data, and certain companies are willing to sell our sentiment data. They want to know, how are we feeling about the stock? Are we feeling bullish? Are we feeling bearish? Over on Wall Street Bets, they were saying that StockTwits sells our sentiment data to hedge funds. They gave the example of StockTwits that each time you create a message, you can let users know if you think something's positive, bullish, or something is negative, bearish. And you can click the bullish or bearish tag before submitting your message. So now I wanted to learn a bit about data. What is this alternative data? So there's a company called Quandl. They're a premier source for financial, economic, and alternative data sets serving investment professionals. They created this presentation, this document, where they teach you how to sell your data to Wall Street. The comprehensive guide to monetizing your data assets for professional investors. So within this, they stated that professional investors who fail to beat their benchmarks quickly go extinct. Beating benchmarks, known as generating alpha, is extremely difficult to do. They've stated that professional investors are eager for new sources of alpha, find alpha or die. So what is alpha? Investors are always looking for an edge, a source that affords the opportunity to earn excess returns on an investment against a benchmark. This is known as generating alpha. So they want to generate data so they can have an upper hand in the market. But we're currently living through a data explosion. So the world is putting out 2.5 billion gigabits of data, and Wall Street believes that this is a savior. It gives them predictive power. And so the 3 trillion hedge fund industry is betting big on the future of alternative data. The spending in 2020 alone is $7 billion US. So this alternative data is basically unique information that not everybody knows. The reason they want this alpha data is because it gives them access to an advantage over everyone else. Over on StockTwits, we often get these robots that try and convince us to sell. So they put out bearish statements, they put out misinformation as well. They pretend to be bulls, so they imitate and impersonate some of the accounts that we trust with due diligence, and then they flip it and say, all of a sudden, I've sold out of my position. It turns out people are thinking the same way I am. I know people are running out of patience. Ian Winthorpe said this. This is not a meme stock. The hedges are trying to get the cheap shares as possible. They have all the time in the world to wait it out. They know you'll get frustrated and leave. Just look at institutional ownerships. It's just a matter of time. So guys, let me know what you think about this topic. And do you think it's right that these commission-free brokerages lure us in with commission-free investing? Then some of them may sell our data, they may be working with their hedgies, and they're also loaning out our shares. Do you think these commission-free brokerages, once we buy a share, should they be allowed to loan out our shares? because my broker has not paid me a fee to borrow my stocks to lend them to somebody else. But anyways, for me, I don't mind. If this drops into the fours, I'm gonna buy even more, because every day I'm looking, I'm scouring the internet, I'm trying to see what they're up to. What are people currently using bionano genomics Sapphire system for? What are the applications? And if more institutions are buying into bionano genomics and they're increasing their ownership, look at all these greens, baby. Green, green, green. So what do the analysts at BlackRock know? What do the analysts at Vanguard think with regards to this company and where it will be in the future if they're willing to have 14.8 million shares at $7.70? Anyways, tomorrow I want to talk about some of the studies for bionano genomics and where they can be in certain industries. There's one of the industries that I was exploring recently where I think there's a big market. As always, thank you for watching this video. If you'd like to send a donation, I have a PayPal link in my description box below. If you'd like to support the channel, you can also click the join button above my head. But if you're unable to, just you hitting the like and clicking subscribe is enough for me. Thank you so much for your love and support. And let me know your thoughts and feelings in the comments. Am I right? Am I wrong? Do you think platforms are selling our data and sentiment data to the hedgies? Because right now, all we can see is on a daily basis that we're one of the highest companies for institutional accumulation. We're in the top 1,000. The other day, we were in the top 100. And according to Fintel, they use a multi-factor qualitative model that refreshes on a daily basis to give a score on the most popular companies that the institutions are accumulating. So thank you very much for watching. Always remember, this is not financial advice, it's for entertainment only. And I'll catch you in the next video. Mr. Investor, over and out, baby.